hours, teeing up with a fast pitch with Eric Udoff. He's co-chief investment officer at Marlowe Partners. So, Eric, what's your number one reason why you're so confident in Eli?
Well, we have three reasons here. Overall, I think it comes down to valuation and the strong trends. So Callaway, as you know, sells golf equipment and apparel, and recently merged with Topgolf. So, number one, the strong industry trends the reopening benefits Topgolf, and then golf overall has been doing very well. Number two, the complexity has made it more likely for there to be a mispricing, and then finally, there's the valuation itself. So, on the strong trends, the group business is really important to Topgolf, where most of the value lies in the company now. As the pandemic continues to subside, we continue to see strong and improving results and earnings beats. Taking a step back at golf overall, the industry's been on fire during the pandemic with work from home. You've seen rounds played up 20% versus 19 last year. We've seen 4 years in a row now of more golfers on the golf course. All this is what leads to earnings upside. The complexity making it more likely for there to be a mispricing. That's a pattern we like to see in investments. A better chance of being right. They struck this deal in 2020 at a good time. Stock's only a few dollars higher than there, despite the earnings and everything coming in much higher than planned. And then finally, the valuation itself. We're at the low end of the valuation range. Good way to look at it's EV to EBITDA. It's at the lower end of the range despite the business improving with this merger. Topgolf is more like Shake Shack. It's a high-growth business, secular grower. And then finally, I'd highlight the insider buying. You have, in December, the CEO and CFO bought shares. And then again last week in bigger size, they bought more.
Guy's got a question for you. Guy?
Sure.
Quick question is this. I mean, would this fall into the category, valuation compelling? Absolutely. Is this simply a reopening trade? And if you believe the back half of 2022 is going to be robust, almost by definition, you have to own this stock?
We think so, yeah. If the group business comes back, that's one of the things that's made Topgolf such a good business in the unit economic level.
All right, Eric, thanks for coming on and fast pitching us. We're going to vote now. No more questions. So are you buying Eric's pitch on Callaway? Jeff Mills, what do you say?
I'm going to give it a big yes. I believe in the Topgolf story. I think that is going to propel revenues in a way that justifies the valuation. And I also think kind of the flexible work arrangements being here to stay keeps people engaged in golf. So overall, I think it's got some runway here.
Tim?
Yeah, I like Topgolf. I'm worried about the capital intensity of that business in the short term, but I'm a buyer, and that's actually a golf club hitting a baseball, by the way. So it's just in case you didn't see that.
Mixing metaphors again.
Dan.
Yeah, I also would be a buyer. There's a great pitch there, and I'd be worried if I were Jeff's employer that flexible work situation and the golf thing that he just kind of teased us up on.
He lives on the golf course.
Yeah, seems troubling.
Guy.
Fair.
Can you read my smart board? You might have heard him point out the insider buying. That's what I said. Read that, please, Mel.
CFO bought stock. Hashtag a GSB.
Yeah. That, of course, guys, smart board. Yeah, and you know what? Jeff Mills should be playing golf. That's part of the job description, Dan. Leave the general alone.